Hello, hello. How are we feeling tonight? Can I get a little sound check? Oh, I can see. All right. Feeling good. That's awesome. That's awesome. Pretty aggressive day today, but we'll be going over it. No worries. With FOMC at 2 p.m. today, we didn't have much price to look at least for myself. I do not trade before FOMC, so there wasn't much for price to tell me before then. So we're going to be looking at 2 hours of price action specifically, so it's not very packed. But I want to first bring you guys' attention to the development of the weekly candle, right? If we look right here, if my indicator stops lagging, there we go. Uh, I can see my weekly candle right here, my daily candle, and my weekly should be, oh yeah, my weekly is right here, sorry. So as you can see, we opened, went to form a high in our key area of interest, right? As we talked about in the weekly outlook, I was looking at this weekly fair value gap right here, this weekly bearish fair value gap right here. Traded into it, we're now expanding lower, and here's where we see the continuation, right? Because with NFP on Friday, you never know. You expect the whole week to be manipulation with NFP forming the real move. So I'd expect if Tuesday continues and we take out the low from last Thursday, to see Friday expand. But for that, we'll have to wait. We have large opening gaps that just keep forming. So we'll see if we consolidate within them or if we expand tomorrow, which would probably mean that I won't be trading on Friday. You never want to be trading after large expansion days. So after Tuesday, you didn't want to be trading Wednesday, but with FOMC being in the afternoon, that's a little different. I want us to dive into a 15-minute chart, and as you can see here, all we did was trade inside the end dog, which is what the new day opening gap. So we traded within said end dog, just expansion through and back until the first 2 p.m. volatility injections, which are the rates, the federal rates, which brought us higher. I want you guys to concentrate on where specifically that brought us. Let's just say I head over to an hourly chart and I look at the full range. That brought us to a premium. More specifically, we went and traded back inside of our premium inefficiency, which you could have spotted by saying that, hey, this liquidity will be targeted. Specifically, this liquidity will be targeted, so I don't expect this order block to be respected. So taking out this liquidity would bring us to this inefficiency. And if I just pop up the CE of this inefficiency very quickly, you'll see that we failed to reach there before, as you can tell, displacing lower. It was a very aggressive move down after this high resistance move up of 368 handles in an hour, right? And if we dive down back to our 15-minute chart, I believe I saw a tweet from someone from T-Trades Education, which called this the Empire State pattern. So we went up very quickly and went right back down. It was, for lack of a better word, fucked up. And honestly, this type of volatility is what you're looking for, but you're looking for it to be clearer. But if you take into account that, hey, we traded back into a premium, respected our premium and efficiency, and yes, I was looking at an hourly chart, but if we go to a 4-hour chart, it's even clearer. Let me just mark it out. So the true move would not have been this manipulation higher, as you might expect on days like this. Let me just remove those new week opening gaps so it aligns correctly. But that's not what we would be anticipating on a day like this. You wouldn't want to be trading the move up because you want to wait 10 minutes after FOMC. More specifically, I don't look at anything before 4:45, with the 4:30 being the press conference start. Let me just mark that out really quickly. So you have your initial volatility injection at 2 p.m. Then you have the news, which brought you a Judas strung down. So yes, you could anticipate higher prices here, but they were all part of a higher time frame retracement. Which, how can you see that? As we have said, right, in our 4-hour chart. Let me just go back to it because I don't want to be referencing something that we are not talking about. We took out external, we went deep into this range. We were not respecting this order block. You know, we've been trading into it, leaving this inefficiency open, and then we have manipulation higher. This is what you're looking for when you want to be on side with higher time frame context. After this huge move up, as you can see, we went all the way back down, respecting this inefficiency, which is our 4-hour fair value gap. You are looking for a setup to form within this fair value gap in this specific case, but within this higher time frame point of interest. And as you can see right here, took out the high of this range before displacing lower, forming what? You have your bearish, I was about to say bullish breaker. You have your bearish breaker block right here, followed by this unicorn, which, yes, the fair value gap was invalidated, but you entered before it had a chance to invalidate. If you're following my model, which, yes, guys, I have not forgotten you, as you have seen if you've checked the X channel, it is coming. I'm working very hard on it, and I just don't want to bring out botched content. I want to bring true value that people can reuse even a year from now. So I'm really working hard on this video to present the model. I hope you guys will enjoy it once it comes. But more specifically, that's the kind of setup I will be discussing, right? And let me just mark that out so it's easy to see. Yes, with hindsight, we can see that, hey, we disrespected this fair value gap, traded back into this consolidation, and respected, right? I don't know if that's not something a lot of people are familiar with, but we respected consolidation EQ. But I was in beforehand. I was in when we started trading back into this fair value gap. And as my 3PD array rule, well, ICT's 3PD array rule states, that's why you have 3 invalidation PD arrays. In this specific case, you'd have this fair value gap, the small fair value gap just above, alongside this order block. So your stop would have been right here and you would have been safe. Yes, of course, that was a lot of drawdown, a lot of stress on the mental, but you have to trust in the model that you'll be trading, right? And that's the entry it gave you. And you always enter on the first fair value gap, leaving room for it to fill the other, which the 3PD array stop loss rule gives. On this specific case, by the way, this is not something I traded. I went long here, somewhere in here in a 15-second chart. I got stopped out with this long wick. I moved my stop up too quick. And on days like FOMC or NFP, I only have one chance. So I try something. If it doesn't work out, I'm done for the day. So I finished the day down $530, keeping risk constant. But I just wanted to be clear on that one. I did not trade this move. But if you were to want to trade that move, and you got in, you saw the breaker form, you saw the unicorn be there in this higher time frame point of interest, then what's your target, right? Well, low-hanging fruit. So you'd be looking at this range. Let me just reverse that really quickly. You'd be looking at this range. Why? Because it's my latest expansion. It is the manipulation from the news. So I want to see, are we going to expand here? And this was my true Judas, and this is just a retracement. Well, if this is just a retracement, where is it going to stop? At your first discount in efficiency. And when you're looking at a 1-minute chart, right, I would prefer to be looking at a 15-minute chart on this leg. I'd say, okay, well, in this range, there's nothing, that's too tight, so I'm going to look at a 5-minute. Oh, well, this one. I prefer referring to an intermediate time frame when I'm establishing a low-hanging fruit objective. Because when you go to your 1-minute, this one fair value gap is the same as there's one fair value gap here, there's a tiny one here, there's one here. Where is it the real zone? Well, I'd be referring to my 5-minute fair value gap, which would be the true low-hanging fruit objective. But if you targeted this fair value gap, this still allowed for 2R as a low-hanging fruit, so you still had a winning trade right there. But I'm going to be precise here, which is the low of this candle. This would allow for 2.73R to your low-hanging fruit. And of course, as a continuation, you have these equal lows right here, which were definitely a very juicy objective, very clean objective. And yes, looks like hindsight, but when you're trading FOMC, you're not expecting, you don't have a lot of time left, right? You don't have a lot of time, so you're not expecting, especially if you're trading a reversal FOMC, you're not expecting it to run that far. So honestly, for me, that would have been the big take profit and then would have seen how we interacted at those levels. And as you can see, taking out here, I'll just mark it like this, taking out this liquidity right here, we just expanded through all the way to these relative equal lows, which were very clean, low resistance liquidity. Would allowed for total of 5R. Pretty decent trade, but not mad I missed it. I have very strict rules with days like FOMC because those are the type of days that don't usually do what they need to do. So I just let them run, let the move pass. It was my first trade of the week, but not too good. And as you can tell right here, you're at 4. So that's the end of session, at least for people trading prop firms like myself. I can't hold past on my swing trading account. I did not enter on this move. I actually closed the long I had running. But on that note, do you guys have any questions related to this or even not related to this? See, tonight was very quick. We're only 13 minutes in. So if you guys have any questions, I'd be happy to help. I'm seeing the lack of answers as a no. No questions. Am I right? Damn. I don't know if I should be very happy and it means that my explanation was right or that you guys don't understand shit. You know, help me out here. I'll take that. I'll take that. Thank you. I wasn't fishing for compliments, but I appreciate that very much. You know, I'm trying to build a great community here, and you guys being here every time is helping me out a lot. This is a big value proposition that I'm trying to do with all the price action reviews and the outlooks, but without people being here and engaging with me on these, it's very hard to do. So I just wanted to take a second, tell you guys I appreciate it very much. And on that note, I'll leave you guys to it. Have a great night. I'm not going to be trading tomorrow, day before NFP. I'm not touching anything, but we'll see each other again on Friday. Good night, Joe. Good night, guys. Have a good one.